Welcome back, guys and girls. It's the trading farm here. So in the last series, in the part 1 of market structure, we looked at the phases of market structure and we went deep to look at a brief view of higher highs, higher lows, and break of structure. So we say that break of structure is when a higher high is taken out, or when a lower low is taken out. Just like you can see from this place, this zone is our break of structure. This is our what? Break of structure. This is our higher high and this is our higher low. So market moves with what? Impulse, correction, impulse. Whenever a break of structure forms, it means that the market is still in the same trend. Whenever a break of structure forms, it means that the market is still continuing what? The trend is still continuing the direction, just like you can see here. Anytime a break of structure forms, it means that what? Market is still following that particular trend. So in this video, we are going to be looking at the protected zones in the market. The protected zones in the market. So the market moves impulse, correction, another impulse. So this zone you can see here is our what? This is our higher low. This is our higher low. And from this zone, the market generated a momentum that was used to break through the higher high, giving us what? A break of structure. So that means that what? This particular zone is protected. So you can say that this zone is our protected what? This is our protected higher low. This is our protected higher low. By protected, it means that if the market is still in the same trade, the market cannot break through this zone. That is why we say that what? It is a protected higher low. If the market is still in the same trade direction, it cannot break through this particular higher low, because it was this higher low that generated a momentum that took out this higher high. So that means that what? This is our protected higher low. So market pulls down here, it pulls up. So at this point, the higher high has been taken out. The higher high has been what? Taken out, giving us a break of structure. Which means that what? This particular zone is our protected zone. This is our protected zone. Making this zone unprotected. Making this zone unprotected. Because the market, as long as the market is still in the trend, it will always take out the higher high. If we are in an uptrend, it will always take out the higher high. So this break, this is unprotected, because market will trade through it. For the uptrend to continue, this is what? Protected. The same thing goes for a downtrend. If you're in a downtrend, just like you can see here. So market book structure. Market book structure. So the lower high gave us the momentum that was used to take out the lower low. So this is the lower low. The lower low was traded to giving us a break of structure. Giving us what? A break of structure. So that means that what? Our lower high is what? Protected. Our lower high is protected. Why our what? Lower low is unprotected. Our lower low is unprotected. You have it. Correction, impulse, break of structure. Lower low was taken out. That means what? The lower high is protected. The lower high is protected, while the lower low is unprotected. This concept of protected zone and unprotected zone, as we go along, you will understand why it is very, very important. If you're able to identify the protected zones and the unprotected zones in the market, it will give you an edge in the market to be able to know when the market trend is changing or when the market trend is about to reverse. So we are going to go in-depth view in it in a short while, maybe in the part 3 of this tutorial. So we know that the market moves with what? Impulse, correction, impulse. So this is our break of structure here. For an uptrend, high, higher low. So this particular impulsive move this particular impulsive move is what we call our swing structure. This particular impulsive move is what we call our swing structure. Swing structure. This is what we call our swing structure. Why this corrective move is what we call our what? Is what we call our substructure. Is what we call our substructure. So if you're able to identify that this is our swing structure and this is our substructure, it will give you an edge in the market, overall market. So that if you're trading the substructure, you're always too careful, because you already have in mind that the market is in an uptrend, but you can decide to counter trade within the market. So you counter traded the substructure, whereas you still have the mindset of the swing structure. So if the overall structure is bullish, if the overall structure impulse is what's bullish, you can decide to do what? To swing. This is the swing structure. You can decide to enter here and you target here. You can decide to enter here and you do what? And you target at this zone. Whereas at the same time, you can decide to trade within this corrective moves. You can decide to trade these corrective moves. So these corrective moves is what we call our substructure. So you can decide to go to a lower time frame. If you don't know what time frame is, we'll talk about it. So you can decide to go to lower time frame and you trade the what? You trade these substructures, these little moves inside the major move. The little moves inside the major move is what we refer as what? Our substructure. So in this particular tutorial, we have covered protected zone, we have covered sub and swing structure. Let's go to the chart and see if you can do something. So this particular chart is in a downtrend. What can you see here? You can see what? There is what? A break of structure here. You can see there is a break of structure here. After this break of structure, that tells you that this particular lower high is protected. So market cannot trade through it. If market trades through it, it means what? It means that our trade is about to change. Just like this is our what? This is a mini. This is a break of structure. Market traded through it a little. Give us a break of structure. So at this point, you might be thinking that the market is changing trade, but we'll talk about all these manipulative moves in due time. We are still in a downtrend. So let's move. This is what? A break of structure. Where is the protected zone? This is the protected zone. This is the what? Unprotected zone. Market push down, push up. So at this point, this is what? Our break of structure. Where is our protected zone? This is our protected zone. This is what? Our protected zone. So this is it when it comes. If you're finding it hard to identify protected zones, you can always take your rectangle tools, you draw it from here, you push up. Within the box, the highest point within the box is the point that is what? Protected. So in part 3, I'll be telling you why it is very, very important to know the difference between protected zones and unprotected zones. So let's go to a higher time frame. Let me show you what I mean by swing and substructure. So from here now, you can see what? This is our break of structure. Remember, I told you in the last tutorial that if the market breaks with a wick, just like you can see here, we don't call it a break of structure. Any wick break is not a break of structure. It's a sweep of liquidity within the transactional liquidity within the higher highs or the higher lows. So the market must close with a body for us to say it is a break of structure. So this is our what? Our break of structure. This is, if you draw it, you see that this is our what? Protected zone. Now, this move that you can see here, this move that pulled back here, we can call it our what? Our substructure. The overall structure here is our swing structure. The pullback, our substructure, then it continues. Substructures. Now, all these little structures you're seeing, all these things you're seeing, all these little moves you're seeing is classified as a substructure. If you go to a lower time frame, it will expand, giving you a trading opportunity. Now, as you're trading and you're shorting from here, you're selling from here, you will bear in mind that we are still in an uptrend though. the swing structures, the overall bias of the market is in an uptrend. So if you're trading the substructure, you'll be very, very careful. You'll be very, very careful. So this is what our breakout structure here. This is our protected zones. This is our breakout structure. This is our protected zone. So these moves, all these retracements you're seeing, is our substructure. If you go to a lower time frame, you'll be able to see a clearer opportunity to trade it. So if you have any question, drop it in the comment section and I'll attend to it. Then make sure you follow, you like, and you subscribe to this channel. So if you want me to drop part 3 of this tutorial, comment part 3 in the comment section. See you guys in the next tutorial.